Are gifts given in the mortgage process taxable? If you give a gift, if you receive a gift, are you going to pay taxes? That's what we really want to know, right? So stay tuned. This is Nick Kristoff for the Kristoff team. Wanted to do a quick little video with some information about gifts. We get a lot of questions from individuals who are looking at buying a home. Maybe they're getting a gift from a family member, from parents, from grandparents, from something like that. And the question really relates to what are the tax consequences? And so wanted to talk a little bit about that today. And I'm going to give you a caveat that first and foremost, I am not a tax advisor. I have talked with tax advisors about this. I have done the research and looked around on the IRS website about this. And so I believe all the information I'm providing is accurate, but I'm going to recommend you talk directly with your tax advisor for more specific information. But the long and the short of it is, for most of the individuals who have questions about whether or not a gift for used for down payment for someone's mortgage or for buying a home is taxable, in general, the answer is probably no. And there are two reasons why that's usually the case. First and foremost, if we take a look at, all right, what are the IRS instructions for when gifts or what they'll call generation skipping transfer, GST, become taxable? First, there is what's called an annual exclusion. So for 2017, the annual exclusion was $14,000. I believe it's now bumped up to $15,000 for 2018. And that means that a gift to anyone who is where the dollar amount is less than that annual exclusion is simply not taxed, and you don't have to do any paperwork. There's no filing. There's nothing that you have to do there. You can give a gift less than that amount with no tax consequence. Separately, if you give a gift more than that amount, and I say that saying that is individually. So a husband and wife can each give an annual exclusion amount. So that could be $28,000 if you multiply it times 2 to one child. And also if you have a married couple and a mom and dad are giving it to son and daughter-in-law, for example, each one could give $14,000 to each of the children. So that could be basically $14,000 or $15,000 in 2018 times 4 for a total of $60,000. So for a lot of folks, that right there can clear any questions about when and what becomes taxable. So most of the time it's not taxable if we're talking about dollars less than that. If you're talking about dollars that are more than that, or maybe it's just one child, so you don't have the benefit of doing that multiplier effect, there is still what they will call let's see here, if we look down on this form, it is an applicable exclusion for basically your lifetime. And as of 2017, that amount was $5.49 million. And so what that means is if you're giving a gift more than the annual exclusion, so more than $15,000 in 2018, you have to file a form. And it's this tax form, Form 709. And basically what they're going to do is they're going to record the amount above the annual exclusion. So say it was $20,000 for the gift, and the annual exclusion is $15,000. The difference there is $5,000, and that goes towards your total of over $5 million, basically, of what's available and to be used in your lifetime. So basically, here it talks about general instructions, purpose of this form. You use Form 709 to report basically transfers subject to any possible federal taxes. So they use this to determine if there are any due, and allocations of the lifetime GST exemption. So that's anything that's done during the lifetime of the person who's transferring the funds. And they're basically tracking to make sure that over the course of the lifetime that the amounts don't exceed what the limit is. And that limit changes. In fact, for 2018 and for the next several years, I believe that number got bumped up to almost like $10 million or maybe $10 million. So it's a really big number for the lifetime. So when we have people ask questions about is my gift going to be taxable? I say generally no. The chances are probably, if you might have a form to fill out, but is it taxable? No. And more often than not, if you're even under that annual exclusion amount, you don't even have to do any paperwork. So definitely check with your tax advisor, confirm whether or not all of this stuff is really specific and applicable to your situation. But I would say for most people I'm talking to, this form is what you'd fill out if you went over the annual amount or the annual exclusion amount. If you're less than that, you really don't even have to do anything. So really, as it relates to what a taxable gift is, you're not running into that too often. So if you got questions, you're trying to figure out, hey, what the situation is for my particular mortgage, feel free to give us a call. If you got specific tax questions and need an advisor or someone to reach out to, you're welcome to give us a call as well. We can put you in touch to someone who is really licensed and knowledgeable more than me in that topic, and they can get into really the nuances of what that means for you. So we look forward to talking to you soon.